Welcome to this video about IFRIC 1. Thank you for joining me. IFRIC 1 is about the reassessment of dismantling costs. So remember, if we buy an asset and with it there's the obligation to dismantle at the end of the asset's total useful life, we will debit the asset, increase the asset with the present value of that provision, and we will credit the provision. So this provision amount can change. So either due to changes in the estimated cash flow, so my future value might change, or number two, my interest rate might change, or then number three, an increase in the provision that reflects the passing of time. So over the years, my provision will increase with interest, but that is just the normal unwinding of the discounting. Changes, however, due to one or two, that will be accounted for as a change in accounting estimate, and IFRIC 1 will explain to us exactly how to account for these changes. So either we are under the cost model, and if there is then an increase in the provision, I will credit, of course, my provision, my liability, and the debit leg I will debit to the cost of the asset. But very important, your asset, as the cost now increased, the asset might be overstated. So we have to test thereafter the asset for impairment. So we have to get the recoverable amount. Let's just make sure my carrying amount of the asset is not now higher than my recoverable amount. If it is a decrease in my provision, I will debit my provision and credit the cost of the asset. But let's say the cost is 100 and the decrease in the provision is 120. Then I cannot credit the asset's cost with 120 because now I actually have a negative asset amount of 20. So therefore, I can only then credit my asset with 100. The excess, the 20, will then go to P&L. If we look at the revaluation model, if there's an increase in the provision, I will credit provision, debit revaluation surplus. And if I don't have any revaluation surplus amount left, any excess will then go to P&L. For a decrease in the provision, I will debit my provision, credit revaluation surplus, except if I actually had a revaluation expense. In this case, I will first, or impairment loss in P&L, I will first eliminate that impairment loss or revaluation expense, and then afterwards also increase my revaluation surplus in OCI. If the PPE item is now at the end of the useful life, any further adjustments will just go to P&L. Please look at these two grouping gap examples, and in the next video we will do an example together. Thank you.